let's add a third thing into the mix, which is the rise of China. And you alluded to this in your earlier statements. If I'm not wrong, you've been visiting China back to the 1980s, and so you've been a student of the country for many decades. Can you just outline what you make of the rising power of China, what it means for the US, and how it relates to some of these earlier factors you discussed around debt and gaps in wealth and inequality?
Well, through history, when a rising power of consequence challenges an existing power, there are conflicts. And what we undeniably have is a powerful China that today is more of a competitor than the United States since 1945 has experienced in its world order. The Soviet Empire was economically not anywhere near comparable. And so we have four conflicts with China. We have a trade war going on. We have a technology war going on. We have a geopolitical war going on in terms of particularly, well, it's around the world, but it's particularly in the South China Seas and that area. And then we could have a capital war going on. History suggests those things. So that dynamic has big economic market implications and implications beyond that. For example, we're going from an environment in which we had globalization and interdependencies to an environment in which we have self-sufficiency necessary, because neither country knows necessarily where this is going to lead. And that means that you can't be cut off. History has shown that cutting off supply lines and all of that. So we're in that particular phase, and it's changing that way. There's a lot in common, and there's a lot to cooperate with. There's no doubt that China is a very effective force that will continue to grow. Since I started going there in 1984, its income, per capita income, real per capita income increased 22 times. It's become substantially larger in world trade than the United States, and so on. Its poverty rate's gone from 88% to 1%. So it's a force, and the interactions between that force are also going to have implications to capital flows, the effectiveness of the economies, and then the geopolitical issues. It comes at the same time, like in 1930 to 45, and this is a pattern, by the way, that's gone down before history. Quite often you have a period of great prosperity, like the 1920s, and it gets overextended with debt because everybody bets on the past being continued, and it creates a bubble, 1929. Then you have a downturn, a depression. Interest rates can't be lowered anymore. Print money, the expansion, internal conflict. Internal conflict and also economic conflict tends to coincide with external conflict, particularly when there is a comparable power rising. In that particular case, it was Germany and Europe and Japan in Asia. So that dynamic is going on and will be important.